Good morning, everyone. I'm Michael Harry. I'm the Chief Compliance Officer and Director of Government Affairs for the Treasurer. He is unable to make the meeting today, so he asked me to sit in as chair. So I think the first item we have is approval of the minutes. Did everyone get a copy of the minutes of the last meeting? If so, does anyone have any questions or changes? Not, I'll accept the motion to approve the minutes. The motion, do I have a second?
Second.
All those in favor, say aye.
Aye.
Any opposed? Okay, minutes are approved. Now we'll move on to the business portion. Fran, I think that's you.
So the voting members of the committee would have received the checks and invoices that have been issued in the last, since the last meeting. So if you all had any questions, we'd be happy to answer those now. And if not, I'll ask for a motion to approve.
So moved.
Second.
Is that it for you, Fran?
It's, well, and then the second item was the budget.
Okay.
So you all also have in your packets a proposal for the fiscal year 26 budget. And we've spent quite a bit of time on this. I'll answer any questions you may have, but I did just want to give a kind of an overview of kind of 2 or 3 primary differences from previous years. There are 2 kind of focus areas for marketing this year will be beneficiaries age 6 and under, and then also really getting a little more aggressive in our marketing efforts to attract the HR, the employer, to let him or her know about the benefits that the 529 plan can have for their employees and how easy it is to incorporate it into their HR package. So with that in mind, one of the campaigns we are proposing, you know, the first or 2 years, so to speak, with communications group, we really focused on general messaging. And now we'd like to get a little more specific in our messaging and would like to use Treasurer Thurston as kind of the face to talk to the employers around the state through, you know, print ads that are targeted to business owners or employers, through the chamber, et cetera. And then with the 6 and under, we've upped our sponsorship and promotion dollars a little bit. We'd like to look for partnerships that make sense to attract that age group and families. The other increases that you might notice are for things that we have been able to track, so we know there's success in them in terms of being able to track how many people saw an ad, and from that ad they went to our website, and from that they went on and opened up an account. So we are proposing streaming TV, Google search, display ads, and Facebook, Instagram ads, and LinkedIn ads. Across the board, we had really good results, and so we've put in a little more money for that. Are there any other questions about the budget?
Not.
Okay, then I'd like to ask for a motion to approve.
So moved.
So, okay.
Yeah.
All right,
Okay.
thank you all.
Thank you, Fran. Okay, I think the director's report.
Right. And you all had an opportunity to, and just as a reminder, we're kind of pivoting to a little bit of a more, a different style for our meetings. For those of you who are used to being here, we'll just kind of give a summary and answer some questions. So with that, the only thing I really wanted to draw or to reinforce is the progress that we're making with GROW, which is that child savings account opportunity that we're working on. They started in February, I believe, with the opt-out enrollment. So across the board, everybody at this Morrell Taylor, we're doing it just for the kindergarten class, right? For this first pilot year.
Yeah, the first pilot set of kids is only 9 kids.
Okay.
But come the fall, we're gonna expand it to students.
Okay. So they're starting, we're having very good turnout, if you will, for the parents. They're not like declining. And so I did want to go ahead and put a tentative date on your calendars. They plan on launching this at the school on Thursday, September 11th at noon. And that is tentative. As we get closer, I'll confirm that. But I did just, if you could do a calendar hold for anybody who would be interested in coming over to the school to help officially launch it. And I believe that those dates have already been sent to the treasurer. Any questions? All right, thank you.
Thank you, Fran. Looks like we'll move down the list and see if anyone has anything to present, any questions or concerns or anything. So we'll start with Don. Please.
Yes, happy to report that the admin account is in the black. The revenues exceeded expenses by about $251,000, mainly due to the rebound in the market, because our fees are based on a percentage of the market. Marketing expenses were about $72,000 under budget, but that's just a timing difference because the communication group bill for May had not been received at the end of the month. So it'll be right in line with the budget after we get that. We had a one-time fee of $107,000 that came in because the Sallie Mae, the admin funds on the Sallie Mae accounts had not been received for a couple of years. I think it was the Vanguard that actually found that, or was it a census?
It was a
The
census.
census. Yeah, and so that was paid. That went into the first security account, which is an interest-bearing account rather than the operating account, the Southern Bancorp. So at the end of May, the two bank accounts, Southern Bancorp and First Security, had a total balance of about $890,000.
Okay. Any questions? Thank you, John. Moving on, Kim, with the census.
Thanks, guys. Typically, like Fran was saying, we would have done a board report, which I do have available and can share on my screen. I'll just share the summary. Everyone received the board packet in the materials that Chris sent out, but just for everyone's awareness, Brighter Future Direct Plan saw growth in assets under management compared to the end of Q4. This report was based on Q1. The number of funded accounts grew by over 400, and the Brighter Future Direct Plan continues to see positive net returns based on both growth in the number of accounts and market performance. So it's great that the market continues to improve, but the fact that Brighter Future Direct continues to see new accounts being open and funded really supports the growth. Did anyone have any questions about any other parts of the report?
Did not.
All right, thank you all.
Thank you, Kim. All right, moving on, Mr. Park.
So Chris, I don't put a one-page summary in here, but I do recall it basically. Yeah. Oh.
Yeah.
So just like a quick overview, right, in terms of the markets, obviously everybody's closely following the trade talks that are happening, closely following a lot of the headlines that are happening related to immigration, related to the jobs reports, related to inflation just generally. There was another inflation report that came out in the past couple of weeks. And this morning, you might have seen that there was a consumer spending report. So all of the changes that the current administration have been making, they haven't all flowed into all of these reports yet. You're starting to see a little bit of that. So I think everybody's trying to closely follow what the real impacts of all of these changes are. That said, inflation, at least in the data that's been reported so far, has been relatively tame, right? And so all of this is going to lead into the Fed's decision-making in the short term, right? And what the Fed is going to be looking for is inflation under check. We don't want to see inflation increasing and our jobs still holding up, right? So if both of those things end up being true, then the Fed will probably, at least everybody is expecting, make 1 to 2 cuts over the next 6 to 9 months. We'll see what happens there, but that is the expectation. These numbers for the performance snapshot are for through the first quarter. I think you saw that because of the volatility in terms of policy, you saw some domestic markets sell off, U.S. securities kind of sell down broadly, which is why you see on the right side of the column the Russell 1000, the total U.S. stock market, the Russell 2000, all being the biggest kind of drag on performance over the first quarter. What you saw on the flip side was a little bit of a rotation to developed markets and international markets. So that's why you see the EFA Minvol Factor ETF being the number one outperformer for the quarter. People also looking for other sources of returns and yield, which is why high dividend is there. So that's kind of a snapshot of what's been happening in the market. As far as the plan is concerned, the great news is that investors are still, their incomes are still pretty decent and they're still investing in the plan. So you saw the plan reach an all-time high in terms of assets. So for the first time, it's exceeded over 800 million in terms of the advisor sold plan. So that's great news. And as far as Arkansas is concerned, also all-time highs. You saw 91 million of the 800 million in the state of Arkansas. You saw the number of firms reach an all-time high, 67 firms distributing the plan within the state. Same thing with financial advisors, 496 financial advisors. A big chunk of that is Edward Jones with over, I think, 200 advisors, all-time high in accounts. And the average account size, obviously, if balances are growing and accounts are growing, also very robust as well. So the good news is that in Arkansas specifically, the plan's doing really, really well. Advisors are really well in the plan. They love the diversified portfolio. They love the ability to invest in very, very low index-based product. And it's gaining traction overall in the state and across the country as well.
Okay, great. Thank you, John.
You're welcome.
Okay, Amanda. Amanda, are you there? I don't know if you're trying to speak or not,
You're
but we
muted.
can't hear you.
Sorry about that.
There you go.
So I'll be brief as well. I do have the summary up here on the slide and we'll, pause for questions at the end if anyone has any questions. But I did want to take the opportunity just to introduce Ryan Matthews to everybody. So Ryan will be transitioning into my role within the coming weeks. We are working through a thoughtful transition plan. Both Fran and Chris had the opportunity to meet with him when we were in Baltimore last week. So you're not getting rid of me just yet. But I just wanted to make sure that you were aware he will be on future calls and you'll probably see him, a little bit more active with these calls going forward. So just to touch on a couple things and try not to repeat all the things that John had said. So the report that I provided is through April. So you'll see we did have, a very volatile start to the year, particularly within the domestic U.S. equity market. So it did end April in negative territory. We did see a strong rebound in the markets in May and year to date so far in June. And really that's largely contributable to the positive trade talks that have been occurring between the U.S. and China. One bright spot, just to point out from a performance perspective, and John did touch on this, is we really saw a strong performance within the international markets. And I think it was a year to date over 16% for the fund that you all invest in. And that really helped, provide some benefits to these portfolios, these multi-asset portfolios that invest in more than one underlying fund. We do foresee that the volatility will continue, at least in the near term. So, the markets do not like uncertainty. There is still a lot of uncertainty out there. And included in this, and I won't go over, but we do have some updates to our year-end market and economic projections that are included in here. So I'll pause here for any questions.
I don't think we have any.
Thank you.
Thank you, Amanda. Okay, we'll move on to new business.
The only thing I had to propose a new business is tentatively looking at a date for our next quarter meeting. It looks like we're looking at Thursday, September 25th. So it'd be again the same schedule, 9 o'clock. If there are any known reasons why that doesn't work, obviously we'll follow up with everybody, but like if you know for a fact that that's not going to work for you, but right now that seems to be a date and time that works for most of us. But we'll circle back around with everybody. Rod, are you aware of any major conflicts? Like, is that a meeting or a conference or something scheduled at that time?
I'm checking our board calendar. We do have a board meeting, or I'm sorry, you said that was a Thursday. Our board meetings are always on Mondays, so I'm not aware of anything
Okay.
from Mark, but
And
and
we'll
I
follow
will
up. Yeah.
I'll let Mark's assistant know that's the proposed date, and she can pencil that in for him.
Great, thank you. And Alicia, anything you're aware of?
No, I can't see Dr. Warden's calendar
Okay.
on mine, but there's nothing that is on our
Like
grid
that.
calendar.
Okay, all right, well, great. We'll follow up with everybody on that.
Sounds promising. Okay, now the moment everyone's been waiting for. The reason why you're all here today. Act 937. Before we get into kind of what you all have ready to present, I don't want to beat a dead horse. Everybody knows what 937 does. It's a pretty clear mandate from the legislature that we need to be at 100% divestment. There is a little carve out for the less than 1%. And I know that that's kind of through discussion and things that we've kind of settled on for now. But I want to, leave it to you all to see what you are ready to propose going forward. We'll just kind of go in the order that we started in first. So we'll start with Kimberly with the census. You want to start first?
Yeah, and thank you. We appreciate everyone's time during the past week when we've been meeting to just to go over what opportunities there are as far as making these changes within the 529 plan. Vanguard and BlackRock are going to speak to what they are going to suggest to you. What I'm going to do is kind of lead us in and go over some things about the 529 plan currently and alternatives for being able to divest as much as we can from China while keeping this a viable plan for Arkansas investors and those who are investing through an advisor from outside the state. So As you all know, 529 plans are optional investments. The money is contributed by and owned by the participants in the plan, and they direct within the plan choices where their funds are going to go. The Arkansas 529 plans, and Vanguard and BlackRock will speak more to this. They currently have limited exposure to China, but we do have options available to further reduce that exposure. As far as going to zero, because of the fact that we have index funds and those indexes are changing, staying at zero or going to zero is not something that we have product for. At least right now, one thing we brought up in a discussion yesterday was currently Arkansas is the first to pass this legislation for 529 plans and participant directed accounts. If more states do follow that path, there might be more to offer, but currently we want to bring you as close as we can with the investments that are available. Like I said, keeping these plans that members want to take part in and want to continue to contribute to. One thing we can do, though, knowing that these indexes may change, is a census can monitor China exposure. We can present to you as part of these quarterly meetings what your current exposure is at the end of the last quarter. And annually, we can relook at these funds and see if there are underlying changes that need to be made. So, we'll continue to monitor for this and continue to assist Arkansas in staying as below that 1%. Another thing I wanted to mention about the investment options within 529 plans. So this isn't specific to Arkansas, but their portfolios are made up of underlying mutual funds. They're chosen, as I said before, as an Arkansas resident, you can be in any 529 in the country. You can, but don't have to be in your state's plan. So we make these primarily passive, inexpensive investments. And the way they're set up is there's asset allocation models. So you might be in a fund just based on your risk tolerance, so anywhere from aggressive to conservative, or you might be in a fund based on your year of enrollment in school. So the further you are away, the more aggressively that fund is allocating you. And as you get closer to when you're going to be using the funds, they become more conservative. These investments, whether they're asset allocation or target based, they have a mix of cash, equities, and fixed income, and they do have both U.S. and international. So like I said, we're speaking to Arkansas today as far as how you're invested, but 529 plans across the country are set up under this model. Christy, I think you were going to be speaking to Vanguard's current allocations and what your suggestions are.
Thank you, Kim. Good morning, everyone. I'm Christy Miller. I lead our state relations team in our education savings group at Vanguard. Happy to be with you this morning and talk about some optionality here. As you'll see on the screen on the left-hand side, it represents the underlying securities that your plan uses to create your asset allocations. And you'll see right now the two products are over that 1% de minimis threshold. If you look to the right, you can see the individual portfolios in the plan and how the asset allocations then drive exposure to China. And as Kim just talked about, when you're talking about more aggressive portfolios, they're going to have more of the international exposure, which drives up that exposure to China. So that's the current state of where the exposure sits in the plan. What I'd like to do is just zoom out a bit and just talk a little bit about Vanguard and our kind of approach to your request here. Vanguard's a unique asset manager. So we're owned by our investors, which makes us uniquely committed to setting investors up for their best chance of investment success. And that means that we want to ensure that your plan participants make progress towards their goals, which is saving for education. So we take our clients' needs and input seriously when we hear feedback, and we want to work constructively on how we can meet your needs and investors' goals in the plan. We're your municipal advisor, and there are several risks and challenges that are presented by the investment policy and the timeline that we've been communicated to us so far. we want to present some options to you that can help meet your needs in the near term while preserving the participants' ability to grow their assets. You're thinking about these over, an almost 20-year time horizon. The challenge that we're facing is that the standard that's being applied in the new law is so restrictive that even traditional, highly diversified building block funds, like the top 4 total products that you see on the left-hand side of the slide, they can't meet the restricted product criteria as outlined in the law. Even if you look at US traditional funds, like the S&P 500, they may not meet the standard because of the law's unique look-through into the assets of underlying assets of US companies. So as Kim said, while your law is a bit unique, other states have instituted similar enactments around ex-China, and they manage some of these complexities through a de minimis provision like the 1% that was mentioned earlier. And what that does is enable options that preserve a diversified portfolio, albeit with some gaps in market coverage, which we'll talk about in a minute. So what does this specifically mean for Arkansas's direct sold plan? We could remove total international stock and total international bonds, so the 2 products at the top of the chart on the left, and we could replace those with a developed markets index. That was what we could do today. Just looking forward a bit, you may have seen in the press that we are launching an emerging markets ex-China product later this year. That could also be added to complement developed markets to protect a broader international exposure. So as of right now, the only product in the plan that fully meets the criteria of the law would be cash. And we're not comfortable having that be a sole option in the plan, obviously, due to the risks to investor outcomes, the risk potentially to plan health, and of course, fiduciary responsibility. We clearly understand the goal of limiting exposure to China, but many US and global companies have some business in China. And that look-through provision combined, if there's an absence of a de minimis threshold, it disqualifies even traditional building block products. Now, it's possible over time that index providers could create indices that screen out under these standards, but right now there's no index available that can do that at scale, and certainly not at low cost, which diversified low cost products is the mandated investment policy statement and pretty much the goal of 529s. So I'll pause there, and I'm happy to answer any questions.
I don't have any questions.
Okay, thank you. I think if anything comes up, we can always circle back, but Kim, I'll turn it back to you to move the presentation along.
Yes, thank you, Christy, for what Vanguard is able to provide both on an immediate move forward and to look further into the future, the ex-China emerging markets. John Park from BlackRock, who's already spoken today, if you want to speak to BlackRock's current state and anything you can provide to us today as far as future path.
Sure. So I'm not going to repeat everything that Christy said as far as being a fiduciary and all that sort of stuff. I mean, I think that, we recognize that you guys have an interest as a co-fiduciary as well. You want to specify your residents that are account holders, but just in general, account holders of the plan. You can see from the chart or the table on the left that essentially most of our exposure is in the emerging markets portfolios. There's a regular core MSCI emerging markets portfolio, as well as an MSCI emerging markets min-vol, which just means minimum volatility ETFs. Those are specifically designed around emerging markets. China has traditionally been the largest emerging market economy in those indexes. We do currently actually have an MSCI emerging markets ex-China ETF. So if we were to, much as Christy was talking about, if we were to swap that out, you can see in the lower right-hand corner, our current exposure across the plan is 1.1%. So we're just above the de minimis. If we were to swap that out, we would be well below the 1%. So that would be the easiest fix, and that's something that we could do pretty rapidly. The rest of the exposures, same exact thing. We don't choose any of these underlying securities because at the end of the day, these are all based on indexes that are provided by index providers, right? So you have the S&P 500, everybody knows what that is. Very difficult to monitor all the corporate actions and where revenue is, coming from. There's a 50% threshold in terms of revenue that's generated within China. All of those reasons make it very, very difficult to completely immunize a broad-based index from any China exposure because you have corporate action activity all the time, especially the bigger the index you get. If you're talking about, the Russell 2000, for example, you've got small cap companies, mid cap companies, their acquisitions happening all the time. It's very, very difficult to completely insulate those. And again, we don't control the constituents of those, right? So the other thing that I would add is that this, unlike the Vanguard plan, which is sold directly to investors, this is an advisor sold plan, right? If you look at the underlying investments within the plan, this is actually the cheapest advisor sold plan in the country, right? So we have intentionally put in extremely widely used and extremely low fee product into this plan. And that's always attracted registered investment advisors in particular, which is why we have the third highest average account balance of any single advisor sold plan in the country. So it's been really, really popular because those low fees and the fact that they're, again, these are not active portfolios, these are just index driven portfolios, have been super popular among financial advisors. So, there are options beyond what I just discussed in terms of just swapping out the emerging markets exposure, but a lot of those would lead to higher costs because we have active portfolios, obviously, and we have customized investment options that we apply on an institutional basis that could potentially customize the portfolios even more, but those would be multiples of the fees that we currently have within the plan because some of these exposures that are widely used are just literally 3 basis points or 3/100ths of a percentage point in terms of expense ratio, right? So, otherwise, as I said, the easiest thing, kind of the lowest hanging fruit, is just to get the emerging markets exposure out of the plan with an ex-China product. Yeah.
Thank you. Thank you all for that. I just want to say on the front end, I really, and I know that we all do, appreciate all the work that everybody's put into coming to the table with all of this. I understand it's kind of an unprecedented question for all of us. We are fiduciaries, we do have that duty. We also have the mandate given to us by the legislature. So I appreciate Vanguard working on the ex-China product, and I think that's the way to go. With that, we do have some time to get to the 1%. It sounds like we'll be able to get there pretty quick with BlackRock ex-China, and then Vanguard, yours is coming. I think that's the way to go. I think it's the least harmful way to get to the number we need to get to. Just want to remind everybody that the stated goal in the legislation is 100%, but because of the carve out, I think it makes it a little bit more palatable for us to get to 1%, but then continuing to work towards ultimately that 100%. So I do appreciate that. I think I probably need to put this in a motion as far as our new policy going forward, I guess. And I guess I would move that we, I'm not sure how we would, as far as Vanguard goes, work towards the ex-China product into the portfolio, and then BlackRock switching out your ex-China as soon as reasonably possible. And then as far as I'd like to add the reporting, I know it's required yearly for the statute, but I also think, I think Kim, I think you said it earlier, having a quarterly report just so that we can, remain vigilant in our compliance with the legislative mandate. So I agree with you on that, and I appreciate you bringing that up. So that all being said, and it's a wordy motion, so we'll try to reword this. You know, we like to make a motion to move towards the next China product with both Vanguard and BlackRock, and as well as requiring quarterly meetings. I guess bringing us all up to date on our exposure to China.
Would those be in addition to the quarterly meetings we already have?
No, they would be during the quarter.
Okay.
Yeah, but just to get that quarterly report during our normally scheduled quarterly meetings.
So as part of their regular report, they would also give a report on where we stand with.
Yes. Yeah.
And they would also generate an annual report.
Well, yeah, that's in addition to the required annual report. Yeah.
Mhm.
Okay. All right. That's the wordiest motion I think I've given in quite a while, but
Second.
thank you. All those in favor?
Aye.
Thank you so much. The motion passes. Is there any other business that we need to take care of today?
Can I ask a question
Sure.
about the motion? I was looking through some of the legislation and I didn't notice that there was an emergency clause. Is there going to be something that is in a day that this all has to happen, or are we just moving?
Yeah, the signing, I think was what, August 6th is what, 90 days after.
Yeah.
So that was, yeah, it's August 6th. So the legislation itself doesn't take effect until August 6th.
Okay.
So,
And then we're looking to implement closer to end of year so that we can have the Vanguard product. Is that?
yes.
And we'll also be able to, with that, get notification to our membership and let them know that these changes are being made, which is definitely a best practice.
Yeah, I agree.
Would this require any kind of policy, like an
Yeah,
investment
exactly.
policy?
Retouch the.
Re-
investment
rewrite.
policy, right?
Because we've been operating under an investment policy.
Yeah, let me take a look at some
Okay.
policy and see what.
I think
we need to tweak it or
It
not.
seems
Yeah.
like we would have to adjust that.
That's a good point.
Like-
I
Yeah, I'll take a look at that.
Okay.
Thank you, John.
And we'll also be supplementing the plan descriptions. Sorry, program descriptions.
ED.
Okay, well, if that is all, I'll take a motion to adjourn.
Motion made.
All right. We are adjourned.
Thanks, everyone.
Thank you
Thanks,
so
everyone.
much.
Thank you.
Thank you, everybody.
So, bye all.